Every few years, it happens. The screens turn red. The headlines scream panic. Markets crash, and people lose fortunes overnight. But here's the thing. While some people panic and sell everything, a small group of investors quietly prepares. And when the dust settles, they don't just survive, they thrive. Because they understand one thing. Crashes aren't the end of wealth, they're the beginning of opportunity. So in this video, we'll explore 5 assets that could thrive in the next market crash. Assets that have historically grown stronger when the rest of the world was falling apart. Stay until the end, because asset number 5 might just be the most controversial of them all. Part 1. Setting the stage. Why another crash is coming. Let's be real, markets don't rise forever. The last few years have seen record-breaking highs, historic stimulus, and massive corporate profits. But history tells us what goes up, eventually comes down. Since 1900, the US has experienced a recession roughly every 7 to 10 years. And yet, every single crash, from the Great Depression to 2008 to 2020, has created massive opportunities for those who knew where to look. So, instead of fearing the next downturn, it's time to prepare. Let's break down the 5 assets that could not just survive, but actually thrive when the next crash hits. Number 1. Gold and precious metals. Asset 1. Gold and precious metals. Let's start with one of the oldest forms of money in human history, gold. When everything else falls apart, currencies, stocks, even trust, gold tends to shine brightest. During the 2008 financial crisis, while the S&P 500 fell nearly 40%, gold rose over 25%. In 2020, during the pandemic crash, gold hit record highs again, as investors rushed toward safety. It's not just psychological. Gold is finite. It can't be printed, inflated, or defaulted on. That's why for centuries, it's been called the crisis asset. Overlay chart. Gold price versus S&P 500 during 2008 and 2020. Silver, platinum, and even newer metals like palladium often follow similar patterns, though they're more volatile. But here's the key lesson. Gold isn't about getting rich. It's about staying rich. It's the anchor that holds steady when everything else sinks. Asset 2. U.S. Treasury bond footage. U.S. capital, bond certificates, traders looking at yield curves. When fear takes over, investors look for one word: safety. And nothing says safety like U.S. Treasury bonds. These are government-issued IOUs backed by the full faith and credit of the United States. In simple terms, they're considered risk-free. During the 2008 crash, while stocks collapsed, 10-year treasuries soared, delivering double-digit returns to investors. The same pattern repeated in 2020, when yields dropped but bond prices spiked. Why? Because when panic hits, investors flee risky assets and pile into treasuries. It's a natural flight to safety. But not all bonds are equal. Long-term bonds can be hit hard when interest rates rise. That's why many professionals now prefer short-term treasuries. They adjust faster and carry less risk. So, while they won't make you rich overnight, bonds can stabilize your portfolio, the calm in the storm. In investing, what's comfortable is rarely profitable. Robert Arnott. Asset 3. Cash and money market funds. Now this one surprises a lot of people. Because cash doesn't grow. But during a crash, cash becomes power. When markets crash 30, 40, even 50%, those holding cash aren't losing, they're waiting. They're waiting for opportunity. That's exactly how investors like Warren Buffett made some of their best deals, by keeping billions in cash during bull markets and buying when others panic. Buffett quote, "Be fearful when others are greedy, and greedy when others are fearful." Money market funds, high-yield savings accounts, and short-term treasury ETFs are modern ways to hold that liquidity safely. Because while everyone else is forced to sell, the person with cash has options. So no, cash doesn't earn much, but in a crisis, it can buy you everything that just got cheaper. Asset 4. Defensive stocks. Let's talk about stocks that don't panic when the market does. Defensive stocks. These are companies that sell what people always need, no matter the economy: electricity, medicine, food. In 2020, when tech stocks fell off a cliff, companies like Procter & Gamble, Johnson & Johnson, and Coca-Cola stayed remarkably stable. Some even grew. These stocks pay steady dividends, rely on consistent demand, and don't depend on speculative growth. They're the backbone of stability. Even during the 2000 dot-com crash, defensive sectors outperformed tech by over 40%. So while the hot stocks melt down, defensive assets quietly compound wealth in the background. The stock market is designed to transfer money from the active to the patient. Warren Buffett. Asset 5. Bitcoin, the digital hedge. And finally, the most debated asset of the last decade, Bitcoin. Now, before you roll your eyes, this isn't about hype. It's about understanding why Bitcoin was created in the first place. Born out of the 2008 financial crisis, Bitcoin was designed to be a decentralized alternative to traditional money, free from banks, borders, and government printing. Over the years, it's been volatile, yes, crashing over 80% at times. But it has also recovered stronger than almost any other asset. In 2020-2021, while the world struggled with lockdowns, Bitcoin surged over 500%. Even institutional investors began adding it to portfolios, not for speculation, but for diversification. Now, no one knows if Bitcoin will thrive in every crash. But as inflation rises and trust in fiat weakens, many believe it could play the role gold once did, the hedge against uncertainty. So yes, it's risky. But in a world that's changing fast, risk can also mean resilience. The opportunity within the crash market. Crashes are scary. But they're also cyclical. They cleanse excess, reset valuations, and create the next wave of opportunity. Because wealth isn't built during the boom. It's built during the crash, by those who stayed calm, prepared, and informed. So when the next crash comes, and it will, remember, gold protects. Bonds stabilize. Cash empowers. Defensive stocks sustain. And Bitcoin transforms. The question is, will you panic with the crowd? Or position yourself to thrive in the chaos? If you found this video valuable, hit that like button and subscribe, not for hype, but for clarity. Because the next era of wealth won't belong to those who fear the crash, it'll belong to those who understand it. Stay smart. Stay patient. Build wealth.